Is dollar finally breaking out, or this is just a fake out? That's what you're going to look at in this weekly outlook video. For those people who are new, welcome to the community. My name is Sharon Kesio and I do this weekly outlook every Sunday. If you have not subscribed, kindly hit that subscribe button. So we're going to start our analysis with the monthly time frame because again, we're starting a new month. It's August. And clearly you can see the month of July, it closed as an inside candle, which means we did not take out previous month high and neither did we take out previous month low. Now, if you look at this monthly, you can clearly see we had all these bearish move here and the market gave us market structure shift here. So you can clearly see at this point, this market has given us a dealing range on the monthly time frame. So all this bullish momentum that we see on the monthly time frame, this is just a retracement to a premium. If dollar is still bearish, the best place you want to sell from is from a premium and not when it's still in the discount side. Because at this point below 50%, this is discount, above this is premium. So we want to see price actually get to this premium array, which we have a fair value gap here. So far, we have this monthly order block here, which actually has been tagged. The month of July tagged it. So if you're still going to continue bullish for price to get to this internal range liquidity, which is our premium array, which is a fair value gap, this should act as support and it should be used to push price higher. And you can also see price has actually left behind a very tiny fair value gap. It would be nice if the new month of August we open, price tags this fair value gap, and then this acts as support and is used to push price higher. So let's look at the weekly time frame, and you can clearly see we had liquidity sweep here. Market gave us market structure shift. Then we got a retracement, price tag this fair value gap, which is a discount period. Now we have a break of structure. And at this point, anytime you have a break of structure, that market is considered a premium. So at that point, in this case, if it's bullish, if you want to continue buying, you do not want to buy at a premium. What you need to do is actually look at this new dealing range created by price, because anytime we have break of structure, a new dealing range is created. Because it's a bullish move, it's a bullish market, it's a bullish dealing range, we are going to look at a discount period. And so far you can see we have the monthly fair value gap right here, of course, and on the weekly time frame we do have an order block. So this is the weekly order block. So as of now, if we want dollar to still continue bullish, right now we can say dollar is at a discount. So this is the best place that we would really love to see dollar get support around here for us to continue with the bullish momentum. So now let's look at the daily time frame. Now, if you look at this, you will realize that on the weekly time frame, this is just one leg. But if you look at it on the daily time frame, you'll realize that it is a multi-structure where the market is making higher high, higher low, higher high, higher low, and then a new higher high. And you'll realize as we are getting these, anytime we have a break of structure on the daily time frame, a new dealing range is created. And then we get a retracement to a discount of this new dealing range. Price gets support and then we get a bullish momentum. And you can see we are continuously getting a bullish structure where the market is respecting the bullish PDRs until we finally get a break of structure on the weekly time frame. And we've said anytime we have a new dealing range created by price, expect a retracement. So the same way we expect a retracement anytime we have a new higher high on the daily time frame is the same thing that you want to see on all time frame. So there's something called the market is fractal, which means what you see on the higher time frame is also what you expect to see on the lower time frame. So I teach all this in the bootcamp that I normally have every single month. I'll leave a link in the description box below so you can join the August classes. And I'm going to take you back here. Remember, dollar, the moment we got a market structure shift here, a new higher high was formed. We did have a retracement. All this was a new higher high on the weekly time frame. Then all this was just a retracement for price to actually tag a weekly discount raise that was below here before we continue with the bullish momentum. And you can see all through as we're having this bearish momentum, you can clearly see the market actually gave us market structure shift. and we were having that bearish momentum even touch on the daily time frame. So this could still be the same thing, just a retracement for price to tag any other discount PDRs before we continue with the bullish momentum. We want to see now price tag the monthly fair value gap. That's still okay. But the first thing we want to see actually, do you see this bearish fair value gap right here? So for bullish momentum, we need to see this get inverted and we continue bullish. If this is used as resistance to push price lower, then at that point we can expect or anticipate more deeper retracement. So this week we actually have NFP on Friday and we have on Monday ISM manufacturing PMI. Now this news here is really important. If we get green numbers, then expect a bullish dollar. That is going to support our bullish momentum. However, if NFP comes in, all this news comes in and it shows that inflation is cooling, then at that point you can expect dollar to still give us more bearish momentum, which means dollar might give us a deeper retracement. Again, if you want to understand how to look at fundamental analysis and line it up with your technical analysis using ICT SMC, I teach all this in the bootcamp that I normally have every single month. I'll leave a link in the description box below. You can join the upcoming bootcamp. So now let's look at USDCHF. So USDCHF and dollar index are positively correlated. Remember, I told you if you're trading major pairs, dollar index is your leading indicator. So you need to do most of your analysis on the DXY, and that will actually give you a direction on what to expect for other major pairs. So because we expect high probability bullish dollar, that means USDCHF, we also anticipate a bullish USDCHF because USDCHF and dollar are positively correlated. Now, if you look at the monthly time frame, you clearly see USDCHF did not close as an inside candle, right? Well, dollar actually closed as an inside candle. And so far, you can see price has actually left behind a monthly fair value gap. So if you're going to still see more bullish momentum, I want to see actually price tag this monthly fair value gap, then we continue with the bullish momentum. Similar to dollar index, you can see USDCHF, we actually have a break of structure right here. So at this point, you can see this market is at a premium. If you want to still buy USDCHF, you don't want to buy at a premium, you want to buy at a discount. And you can see we have the monthly fair value gap right here, and we'll have gotten a retracement to the discount of this dealing range before we continue with the bullish momentum. So let's look at the daily time frame. If you look at the daily time frame, you can see so far this is what we have. The monthly fair value gap is right here in line with this daily fair value gap. It would actually be nice if price tags this daily fair value gap together with the monthly fair value gap, and then we see that bullish momentum. Before we proceed, if you have not subscribed, kindly hit that subscribe button. You can also turn on your notification bell and also like this video if you enjoy these weekly outlook videos. So now let's look at EURUSD. So EURUSD and dollar index are negatively correlated. That means if you expect a bullish dollar, then EURUSD is bearish. Now, you can also see EURUSD actually closed as an inside month, July. For EURUSD, our draw of liquidity is this monthly fair value gap here. Again, it's the same as dollar index, but now the opposite side. You can see we have a new higher high. If you take a Fibonacci tool from this low to this high, this is a discount of this dealing range. So if EURUSD is still bullish, the best place to buy from is from a discount. And so far, this is our discount PDRE, this monthly fair value gap here. So let's look at the daily time frame. So on the daily time frame, you can clearly see we have this fair value gap here. And you wanted to see price tag this before we see a bearish momentum. Of course, last week we actually wanted to see price get to the previous month low before we see this bullish momentum. But again, because we closed as an inside month, price failed to give us that bearish momentum to take out the previous month low. Instead, we have just gotten that retracement. So it will be nice if price tags this and we see that bearish momentum. Also, actually, we forgot to look at this. On the monthly time frame, you can see we have a monthly fair value gap here, which is in line with the daily fair value gap. So if you're going to see the bearish momentum, it would be nice if price tags it and then we see that bearish momentum. So let's look at GBPUSD. On the monthly time frame, if you look at this price action here, you can clearly see this looks like a consolidation or a range. But as far as I'm concerned, as long as dollar is still strong, is still bullish, I anticipate GBPUSD to be bearish. So let's look at the weekly time frame. If you look at the here, right here, you can see we do have what? We do have a bullish fair value gap right here. So for bearish GBPUSD, we would actually want to see price invert this. So once price inverts this, then that's a good confirmation that GBPUSD is likely to give us bearish momentum. So if you look at the daily time frame, you can clearly see we do have a fair value gap right here. Now, this determines what you're likely to have. If dollar is still going to give us a deeper retracement, then these will be used as support to push price higher, continue with the bullish momentum. If dollar is going to give us a bullish momentum, then you want to see price actually invert this fair value gap, and that is your first sign that we're likely to start seeing that bearish move. Now let's look at gold, and before we proceed, I want to remind you again, if you have not subscribed to this channel, kindly hit that subscribe button. And if you enjoyed this video, don't forget to give it a thumbs up. Now, if you look at gold, you can see we did close as an inside month. We did not take out previous month high, and price also did not take out a previous month low. And you can clearly see price has actually left behind a bearish fair value gap. Now, if gold is still going to continue with the bearish momentum, you can clearly see we do have a bearish fair value gap. It would be nice if price actually comes here and you continue bearish. So let's look at the weekly time frame. You can see we do have actually the monthly fair value gap right here. And you can see we do have some buy side liquidity just before it. So it will actually be nice if you can actually get that retracement to the monthly fair value gap. And then we continue with the bearish momentum. And again, you will know this. If dollar will still be bullish, you will see gold is going to be bearish. So let's look at the daily time frame. You can clearly see the monthly fair value gap lines up with this inversion fair value gap, which you've actually been watching for the past 2 weeks. Lastly, let's look at BTCUSD, and we'll start with the monthly time frame. You can clearly see, of course, we have been having a bullish BTCUSD. Then at this point, 2026, 2025, 2026, we started seeing the bearish momentum, and you can see we got the first market structure shift here, which you can also call church. So the difference between market structure shift and church is this. Now, with church, you actually need to see a break of structure before the market breaks this low here. So then that is your church. This is how you get church. For market structure shift, you can get a failed swing high or a failed swing low. Then this becomes market structure shift. So you can see here, we do get break of structure and then we break this low. The moment we break this low, this becomes a church, which is still considered market structure shift. But then this is strictly market structure shift. This will not be church. Again, I'll not stop insisting. If you want to learn all this, check the link in the description box. Join my classes. Now, so far you can see we do have a monthly fair value gap here. So price can actually give us a retracement to tag the monthly fair value gap, and then we get the bearish momentum, so that this monthly fair value gap acts as the higher time frame point of interest and the resistance level before we see that bearish momentum. Because for me, BTCUSD, I'm watching this south side liquidity. This here is my draw of liquidity for price. Now let's look at the weekly time frame, and if you look at the weekly time frame, you can see it is really clear. The market makes a lower low, you get a retracement to a premium array, then we make a new lower low, then the market gives us a retracement to a premium array, and now the market has actually done what? Again, we have made a new lower low. So anytime we have a lower low, of course, that is break of structure. And so far, you can see price actually left behind a weekly fair value gap. And you can see where we do have this weekly fair value gap, it's also in line with our monthly fair value gap. So this is what you want to see. So lastly, let's look at the daily time frame. And again, it's really clear where we have the weekly fair value gap. We also have the monthly fair value gap. We also have a daily fair value gap. So we do have 3 fair value gaps lining up at this point. And this point again is what? The premium of the weekly dealing range. Now I want to tell you guys, 35% of you who watch this weekly, you have not subscribed to this channel. Please hit the subscribe button. And if you like this video, please give it a thumbs up. I'll see you in the next one.